Hello traders, welcome to Trading with Tao, or the Tao of Trading, depending on how you're looking at it. Today I want to talk about what distribution and accumulation looks like visually, and how it helps, what it means, what kind of patterns are the most common ones, and how do you trade them. As you may or may not know, I am trading price action only. In the sense that I'm primarily looking at price action, so support and resistance, or in other words, accumulation distribution. And in addition to that, I do have 2 to 3 indicators I usually use as a other representation visually of momentum, in a sense. So my main one is the MACD, as you can see. I use that since probably 5 to 6 years already, so my mind and my eyes are trained heavily to interpret it. So anyways, let's get into it right away. Distribution accumulation, why is it very nice to know, is basically because price keeps moving between the two. So when you have a lot of buyers, obviously there is an accumulation phase, and usually if the accumulation is successful, it will pop off to the last distribution. That's pretty important to know, and it's actually some pretty good information right there, because what that means is that you can have automatic price targets in the long run. It depends on what time frame you're trading, but those patterns repeat on any time frame. So you can use them in swing trades, you can use them in positional trades over multiple weeks, or you can use them in day trades if you want to, over just a period of a day. Because no matter what time frame you look at, this whole process of accumulation and distribution occurs on every time frame all the time. So anyways, just a few examples. Obviously, hindsight is always easy, right? But if you look back on, in this case, the Bitcoin, what you can see is, if you look back, you will see that there has been some sort of accumulation pattern, some sort of divergence as well. So if you look at 2018 to 19 period, you can see that there is some sort of accumulation happening right here, right? Usual accumulation patterns are wedges, flags to a degree, inverse or normal head and shoulders, cup and handles, double tops, triple tops. Those are the kind of things I am looking for mainly. You can go on patterns, but pattern trading itself is statistically not as effective. That's what I come to the conclusion of. So for me, it's basically, I want to look for signs of distribution accumulation. So in this case, in this example, what are the signs of accumulation here? Well, you have a pattern forming, obviously. But besides that, what do you see? You see 2 sort of bottoms here. And what you can see is that even though you have more or less a similar price level on the bottom here, you can see that on the MACD, the momentum of the selling pressure is decreasing, right? You look at these 2 here, you can look on the histogram. The histogram itself, you can see that the steepness of the valleys is decreasing just over this period of time here, right? And here it's on, price retests the same support, the same price level as it has been a year before, and you can see that the selling pressure is definitely way less, so therefore building a divergence, which is a sign of, in this case, accumulation, right? The selling pressure is getting less and less and less, more buyers are stepping in, aka accumulation. So in this case, you could go for, tradability wise, you could go for a retest play. You could start getting in on a lower time frame, maybe on some sort of trade, bottom trade, whatever forming. If you zoom in, you could look to your MACD and see, is there something supporting on a daily here? This is week-wise, it's not really tradable, right? Unless you had some sort of support resistance level marked out from before. You can see these tops and former resistance right here that basically turned to support, right? So get, in a sense, retested. You probably, on this level here, you probably have to drill down to the 15 minutes to see if there's some sort of retest of some sort and some sort of bottom forming, some divergence forming, and you could get in. But this is a pretty big time frame chart, so be aware that obviously the bigger the time frame, the more inaccurate in a sense it gets, and the more leeway you need to use when you're trading it. So this is why this is helpful if you're doing it on a big time frame, because you are trading with trend if you're trading lower time frame in that case. When I trade, I usually, even when I day trade, I want to check out the chart first. I usually do delete the chart and do a clean chart, and then just go for dissection of trends, seeing what's happening on the daily, on the weekly, on the monthly even, right? You do it in this case, you could monthly, and you will see monthly wise we have a big uptrend, and you can see that, well, monthly wise there's not too much of a distribution happening. You can see that in this last swing here, we have on the histogram, we have some divergence building, so there are probably signs of distribution on the lower time frames here, and we can just take a look at it right now for another example of distribution, not accumulation. We had accumulation before, right down here, and here on the distribution level, you can see, well, you see making a new high, right? But in reality, on even the signal of the MACD and on the histogram itself, you see there's lower highs. So definitely not the momentum to support this move up. So once you lose something on a lower time frame, you most likely will have a pretty big move to the downside, because the higher time frame is dictating you, well, we do have momentum waning, right? This is why the higher time frame matters. Now, if you go down to a lower time frame, or maybe to a 3 daily or maybe a daily, and I mean, if you're seeing this divergence here building up, right, we had from this peak to this peak on the 2 weekly, I think it was. Well, then what do we do if you want to get on a, maybe on a swing trade or something? Well, you want to look for something to happen on the daily in this case, right? So on the daily, again, you can see, well, we have something building here. Over time, you see there is some sort of sloppy, but it's definitely there, right? It's just wedges over wedges, no matter where you look. There's some sort of distribution starting to form here. Hard to pinpoint exactly, but where do you see it as well? You see as well that the new high here that's marked, definitely lacking in strength, right? Right there. Pretty obvious to see. So this is your pointer here to, you know, maybe even use a drop out of some sort of trend line. Depends on how you want to draw it. And it really depends on how you want to draw it and how you're trading this, but you know, you could go for something like this, drop the trend line, break if you want to do a breakout trade. Or what you could also do is you could look at, you know, price action. Really, I'm not going to spend too much time on price action because this video is more about accumulation distribution, which for me ties into my price action trading, obviously, but price action itself is obviously observing what price is doing. And in this case, you have to look at the lows, the highs, where are swings. This is a new swing to the high. In this swing itself, there is a new swing here, swing to the high. So you could drill down on the 1 hourly. If you drill down to the 1 hourly, well, you will see that the swing here, right? Swing low to the high, new high. Therefore, this is an intraday or an intra swing within the bigger swing or bigger trend. And then you can just mark off the levels here. Support, resistance, color here. And then you can, you know, look for a retest, for example, once it breaks, because you see this here, swing gets broken. So we have a structure break here because we have a lower low, right? Higher highs, higher lows, higher high, lower low, break of trend. And you could maybe go for some sort of retest of the last support that we lose, which is right here. That's your entry right there. What would be your stop? I mean, probably above this high here. If you want to do it factually correct, price action wise, this would be the stop you'll need to use, because this is the last high, right? Technically, this gets broken to the upside, well, then we definitely have some sort of new trend forming to the upside, which can happen, but is less likely to happen on the first time you retest this support area. Either here or here in this area, you usually should get a knockoff, depending how big it is, and what your higher time frames do. Why would you want to take this time frame if there's no higher divergence on the next higher time frame, right? This is why time frames matter. Let's see where we are here. So, right, you need to look at the next higher time frame, because that will dictate the lower time frame. We were on the 1 hourly. Okay, we look on the 4 hourly. This push to the high, yep, definitely showed divergence. So there might be some trend change happening. You go to the daily and you check out the daily. It's a daily too. Technically, you want to do it the other way around, right, to be in the right time frame. But you see the divergence building and building, and you're seeing it building and building, right? Here again, right here, higher high. Divergence. Okay, so that's how you get into that trend or into that reversal structure. This is why accumulation distribution is pretty helpful to spot on any time frame, because you can take a trade off of it, especially if you have, you know, a divergence showing in one time frame. You can skip down, rotate down a time frame, and use that time frame to see, is there a tradable entry. So the most recent one, actually I did a video about this yesterday, or I tried to do a video about this yesterday. But unfortunately, since I'm new to this whole business of recording and everything, I definitely forgot to switch on my microphone. So the whole the whole video of yesterday was pretty much lost. But yesterday I already had I was trying to do this video and trying to show what accumulation distribution looks like, and I was telling on my video, I was saying, well, if you look into the Bitcoin right now, you can see that, well, we had a big price moving down, and we have some sort of accumulation or distribution phase happening here, right? And it doesn't have to be accumulation, but would very well be accumulation, because we had a big move down. So some sort of relief rally usually happens. Doesn't mean it's given, but you know, there's something happening here for sure, price action wise, some range forming. And then, you know, you can look onto, is there a distribution forming? It's not really clear. It looks more like some sort of messy accumulation. But then I told in the video, I was like, well, if you look at the 1 hourly, you will see, well, there is, again, classic pattern here, some sort of rising wedge happening, right? And if you see these wedges, these are very nice to trade. So I went, actually on the stream, I showed that I went short on this. On the recording, I short on this here with a price target technically of the lower part of the wedge, which got hit. That's not a good RR in that case, because obviously if you enter here on the retest and your price target is here and your stop is here, that means your RR is like 1-to-1 or something. That is not very good, your risk to reward, because you do want to go for better risk to reward trades. So you don't have to be often as right as often, right? But this was a rewarding move. We came down to range lows again and tested this. So, and why did I know this is a distribution that's happening? I was looking at the histogram and I was seeing, well, I mean, there is some lacking in buying power, right? Every single push up to the new high, it's getting a lower histogram showing. The MACD was not 100% clear on this, but you could see the slope was flattening, right? Which is why I took that short anyway. So this is why you want to look at these things, right? You can let's see, some levels marked here, but you can look at this as well. If you look at the traditional indices, you can see yeah, okay, so if you look at the ES, for example, right, you will see that on disregard these price level trading anyway. So you can see that there is always, on any time frame, you will see patterns that evolve, that are distribution or are accumulation, right? Doesn't matter how you look at it. Like, you will see some sort of triangle forming in some sort of way. Now, it's sometimes it's very, 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 very ugly. Like this one is a very ugly pattern to trade, I think. But it was showing, right? It was also showing on the histogram, on the MACD, new high here comparatively to these. And you see, well, this is still not as good as the buying pressure is definitely subsiding. The momentum is waning. But yeah, this is how you want to trade distribution accumulation. Why is it good? Because, well, once you have some sort of accumulation happening or distribution happening, you can take the trades on a low time frame, and you have technically targets. Why? Because, well, if you look at it, here is some sort of accumulation happening, right? Or you can say this is some sort of double or triple bottom, whatever it is. This is accumulation, it pops off. Once it starts distributing here, this distribution is definitely going to target what? This zone of accumulation. I said in the beginning of the video why accumulation distribution is very useful, because same for support resistance, same thing, just different term. If you break out of some sort of accumulation, you will target a distribution that has happened before. Now, this is price exploration, so obviously that doesn't work as well. But once you distribute and you break down, you will target the accumulation before that got you to this distribution. This accumulation gives you this distribution. This is where price moved. Once this breaks down, what are we going to target? We're going to target the last support, the last accumulation range that we formed. Now, where is it going to be? It's obviously not that clear cut, and that's where trading with experience and price marking comes out. But you can have certain support levels that you see where price is reacting. I probably will get into this more on the next videos. And these will be your price targets. This is your target. This is a target. Technically, probably even the high is a target here, but that is obviously RR-wise. That's not really what you want to be looking for. And you know, what do you know? You get this trade down, this move down. Now for this, then obviously in these days here, you want to look for shorts. So you drill down on the time frame and you look for shorts and you see, okay, what can I do with this? Is there something I can trade with the trend direction? And that's how you can maximize your profits. This is just some levels I marked out in general. I think this is a side note. I will, before I conclude this video, right now we have 24th of May. And I do think we're nearing a short-term bottom for now. Although long-term, I am looking for this range here, the 3500s, because I think this is a logical place to retest. If I zoom out, you see monthly has lost some steam. And I think it's a logical place to retest, because we usually do retests of previous support zones in a sense. This one is a bit narrow, this retest, and maybe even we go down to this one, but that would be the Great Depression kind of scenario, which would mean we would bleed down to this level over the next 2 years. It's possible, but if you zoom out, this is why I'm a bull, because the longer you zoom out, the higher you see the trend is. Right. We could lose this trend, obviously, but before we do, I'm not going to think about these kind of things. And this is the last swing we had. This is COVID, I think. Lows and COVID lows give you this intraday trend. So anyway, so just to conclude this video on the outlook of indices, I think that we are close to bottoming. I would look for something that does not go really below this one daily, because there is some nice support areas that have not been tested in this region right here. If you zoom down on the 4-hourly and on the hourly, you will find them. We already had the test here. We might even wick down one more time. Why? Because, well, we need to accumulate, right? So overall right now, the pretty sloppy accumulation. This is more like only a channel. So I would suspect with this building here, I would suspect we're losing selling pressure, as you can see by the histogram, right? Each push down is less, so I suspect is that we do something like retest and go, whatever. We need to capture this high first, and then while doing this new low swing, we will probably form a pretty big divergence on the MACD here as well. You know, we will have some sort of distribution happening here. So this is what I'm looking for right now on the market. Obviously, it's not always clear cut to trade, right? But this is what I'm looking at, just so you know. I will probably do an update on Bitcoin as well. I think Bitcoin probably will move some as well with the indices. This should happen over the next 1 or 2 weeks, I believe. So probably early June. I'd say that there's some time for longs. What are we going to target? We're probably going to target some sort of double top area here. Probably this area here is a target zone for me personally. So this is why you want to do this, right? You could go to other stocks as well and check them. Let's see, maybe Amazon. I know I did something here a long time ago. Yeah, I did this long time ago. It didn't break here when I was saying that, you know, there is momentum going downwards. But once we break this trend line, we're gonna see the last high of this accumulation area here. Why is this accumulation? Because you can see the divergence here. You can see it's building up. You see that there's higher highs, trend change, and we pop off of it. So you have to regard this as some sort of sloppy accumulation zone, or you could also term it differently. This is some sort of support zone, right? So support that we gained, which gives us this area here where we come down to. So even though it looks kind of bleak at the moment, you would suspect, unless there's some wild shit going on, I suspect a pop up to this area here, the last support we have been losing. So if you drill down, then you could go again, do the same thing. This right here is some sort of sloppy accumulation, some sort of maybe flag you can see. I don't know, something like this. Whatever, you will see. And if you drill down, that this push here, we have lost steam. Go down 12 hourly, probably already, maybe the 4 hourly. And if you go down, if you go out to the monthly, you see even though we have this push down, this is just a usual mean reversion play. So I don't think that the bull market is broken on the monthly. But you could see on the 2 weekly and on the weekly that where is our steam, right? Higher high. What is going on here? Histogram is negative, no push here, so that was pretty much a warning sign for everyone to know, okay, I should take profits, right? I should take profits, and I should be aware that there is a big down move coming once we break some sort of pattern. And in this case, the pattern for me was just, you know, some sort of rising wedge once again appearing. Now, the most reliable patterns in my experience are double tops, double bottoms, right? So double tops and bottoms, of course, maybe triple tops. These are this one for sure. Then the wedges, rising and falling. And the last one for me personally, what I like is, which is in a form double top or triple top or bottom, is the head and shoulders, right? Head and shoulders is, in essence, head and shoulders is exactly that, a triple top or a triple bottom, because you have some sort of distribution usually showing up on the histogram and MACD. Let me check a sec. Because if you have a head and shoulders, it's usually something like this. It's never perfect, so I don't want to draw a perfect one, but you know, it can be any form in this regard. So and if you have this, you will usually, what you see is you will see on the histogram down below, you will see that this push here is high, will have a lag in the histogram and in the MACD, and even this one here will almost usually go negative, sort of like the Amazon here. In this case here, you will see that there is no support in momentum whatsoever, right? This is what for me the MACD is so useful for, because if I look at multiple time frames, I can sort of use the MACD as a right now tool, not as a lagging tool, because in essence usually the indicators are all lagging tools, because they take your averages of the past and make them visual and plot them out visually for you, right? But if you tie in multiple time frames, and you probably got the gist of it in this video, then you can make safer predictions and probabilities where the price will go, and therefore increase your probabilities while you're trading. And we all know trading, in the end, if you have been long enough in the game, it's a probability game. There is no way of 100% knowing where price is going, but there's the chance of saying, well, there's a very high probability that price will fall, or there's a very high probability that price will go down, pop up, right? And that's why you want to trade, and that's where you want to trade, using stops and using a certain set of rules to mitigate risk if you're wrong. And if you're right, you're gonna cash in big and outrun the losses of your losers, right? That's how you stay profitable consistently. I will do some videos on those as well. But anyways, this is the hopefully quite short video on accumulation and distribution. Look for those wedges, look for those triangles. Don't get too caught up in them. Don't be too much, you know, trading hardcore patterns, but just look at, you know, the combination of your histogram, of your signals, of the MACD, and use it in combination with price, and train your eye, because it's going to take a while to actually get used to it, right? But once you get to know it, you will see that there is reversals incoming, and that's all you need to know, right? Like they can fail sometimes if the higher time frames are down. So for example, one failed trade I had was I was looking for long because I was seeing that the pushes here are getting less and less. So I took longs at certain resistance zones and got stopped out. That's okay. Why? Why was it a trading error in a sense, or why was I wrong? Well, because the higher time frame was still showing there is more momentum to the downside, right? And Baba, for example, is one of those names. Well, we have gotten to a really nice level at this point. Is it going to bottom right here? Hard to say. We could definitely still touch the 60s. But you can see even on the 2 weekly and on the weekly, we are starting to curve up. Every single push down is starting to be less and less and less. So I do predict that there is going to be a Chinese resurgence in the next couple of weeks and months, and that the Chinese stocks will play a big role, and everybody's going to be hyping those, like, once they already started going, of course, and we already took our positions by then. But this is what I'm watching right now, on the daily, on the 3 daily. I'm watching this pattern here. I'm seeing very clearly for me, even on this time frame, that push down, if you just look at this. I mean, this is some pretty deep stuff. We still haven't captured the high here, the last small swing to the low. So therefore, this is still an iffy trade, but I am taking Baba when we're getting out, and I'm just going to use it and see if I am early to the trend reversal. This is not the safe way to trade it. The safe way to trade it would be that you're not waiting for the waiting for the reversal, look for confirmation, and get on a higher time frame. But if you're doing it the way I'm doing, obviously you can increase position size because your stop is going to be lower, right? Because your probability stop, once it breaks out of this wedge here, going to put it below the low or below the breakout, and that way you're going to have a bigger position size, which is nice for money's sake. But the problem is you have to keep close note, and you will probably suffer a few more losses than wins. So you have to have some experience to use these kind of trades. Anyways, I hope that was helpful. Like and subscribe if you want to see more of this. I will definitely share some outlooks of Bitcoin and indices regularly, I think, because I've gotten to the point where I need something new to occupy my mind, and I think this could be very fun and helpful for people that start out, because I remember when I started out 2016, 2015, that was a brutal time, man. That was a brutal time. I think 2 or 3 years of busting accounts and just losing money until really getting into good habits and understanding price action, understanding what price does. So anyways, have a good one. Stay safe, trade safe, use risk management. Don't forget the 2% rule. If you don't know what it is, I'll have a video out on that, where I will explain further in the next one. See you.